Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq 100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Monday afternoon, we have Chris Dearborn, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq 100. And Chris, we're seeing range bound, kind of very quiet trading for this Monday, coming off of last week's stunning rally, which could possibly be welcome for traders, after coming off of weeks of 1%, 2%, 3% moves.
The index is actually up 6 of the last 8 sessions. I don't know if today is going to hold. It's you got rising treasury yields, which always goes poorly for tech stocks. And I think it's kind of one of the headwinds right here. But surprisingly, we're up 7% in those 8 days, which is kind of a nice rally. We're only off, 100 points right now in the NDX. It's sitting on support right here. There's a lot going on macro, but last week was phenomenal. And the rally, the trading volumes were fantastic with the Russell reconstitution, which impacted almost all of the members of the Nasdaq 100 in a very positive way on volume and in price. And we're looking forward to an end of quarter rebalancing here for a lot of portfolio managers. So there still could be some more volatility for the week ahead coming into the hot 4th of July weekend.
And Chris, let's take a look at your first chart here, some fresh levels to watch on the Nasdaq 100 following those few sessions of positive activity.
Yep. So if you look at the bottom of the chart, what we usually talk about relative strength, and the RSI is reading at a 49 right now, which is kind of a neutral reading, which is what we're seeing in this aftermarket of the big market rally that we've seen the last couple of days. I wouldn't call it a huge rally. We've seen much bigger, but it is a 7% gain from the lows of right around 11,037 to where we are right now at almost 12,000. Support is very tight at 11,967. We don't really want the break there. It's only about 20 points away from there. Resistance overhead is tight as well, 12,190, 12,388. That 12,388 number is the Fibonacci 23.6 retracement level. We really don't want to see that kind of get through that and hold on a closing basis. We don't want to fail there, because what's interesting, the 50-day moving average is declining significantly here, which stands at 12,486. So that's really only a 9-iron shot away right now. We like to see it as a wedge shot, but 9-iron right now is where we are. And if you want to talk a little golf in the summer season here.
Yes, you do have to, you have to fall in line with the seasons. Let's take a look at your next chart here and which constituents are leading the way.
Yep, it's about 2/3 down to up. All the tech names are getting hurt a little bit here, but most importantly, you're seeing Amazon negative about 20 points, Microsoft about the same, Alphabet about the same between the two classes of stock, and Nvidia is off about 5%. Positively, though, we've got a couple of nice names up there. JD.com's up 2.5%. Obviously, they were not part of the Russell reconstitution, but that's good to see. You see a number of other names, Qualcomm, Walgreens up there. So, nobody's really moving far away. There's not a big push down. The worst companies today are Lucid and EA, off about 4%. But again, it's 2-to-1 losers to gainers.
All right, Chris, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.